So, hi everyone, this is Shivram from Chennai. I'll be covering accounts, economics, and costing. That's my area of specialization. Now, let's go for today's topic, which is accountancy. So, before reading any subject, we should know why we are reading that subject. Now, what is accountancy is all about? Accountancy is nothing but it's a language of business. Just like any other language, like we have Tamil, English, Hindi, all these languages, accountancy is also a language. In suppose English, Hindi, Tamil, all these languages are for what purpose? To communicate our thought process. Similarly, the purpose of accountancy is to communicate the business transaction to the users. That's why we say it as language of business. So if you're running some business, what has happened in your business, like how much expenditure you have incurred, what is the revenue you have made, how much assets you are holding, and what is your liabilities. So all these things, if a user wants to know or a third party wants to know how to communicate to these people, is what we will study in accountancy. So simply we call it as it's a language of business. Just like any other language which is used for communication purpose, accountancy is also used as a communication purpose. Now in this accountancy, what is the process involved? So there are totally 4 steps involved here, which is the first step is going to be journal entries. It's something like our in English, what we do, the very first step, what we took is learning the alphabets, right? So we call this as A, we call this as B, this as C, and so on. So we study A, B, C, and all. That's the first step in English. Then what we did after the letter, we call this as letters. Then we moved to words. Then we moved to sentences. Then paragraphs, and so on. That's the evolution we had in English. Similarly, in accountancy, the first step is passing the journal entries. That's like our ABCD of accountancy. So only if you start with journal entries, you can move to the next stage. Now, how to pass the journal entries we'll be covering in today's session. Once journal entry is passed, the second step is preparation of ledgers, followed by preparation of trial balance, and finally the last and final step, the fourth step is going to be preparation of financial statements. So accounts starts with journal and ends with financial statements. In financial statements, we have 4 components: trading and P&L account, balance sheet, cash flow, notes to accounts. So if once all these 4 points are covered, basically accountancy will be over. So a quick recall: accountancy is nothing but it's a communication tool. It's a language of business. We are going to communicate the business transactions with the users. Now the process involved is you have to start with journal, which is just like our ABCD of English. That's the first step. Once journal entry is over, we'll move to ledgers, followed by trial balance, and finally the last and final step, the fourth step, is preparation of financial statements. In financial statements, we have 4 components: trading P&L, balance sheet, cash flow, notes to accounts. Now let's get started. How to pass journal entries? Now for this journal entries, there are basically 2 approaches are there. One is traditional approach, the other one is modern approach. Both the approaches will give you the same answer. Whichever approach you follow, the answer will not change, but the way you look at the accounts will differ. That's the only difference. So whichever is convenient to you, you can go as per that method. So traditional, modern. In traditional accounts, what we do is we make the following classification of accounts. See, accounts will be classified into personal account, real account, nominal account. What are these? I will explain you in a bit of time. And coming back to modern rules of accounting, accounts are classified into 4 broad categories, which is expenses, income, asset, liabilities. For classroom discussion, I will be focusing substantially on the modern rules of accounting. Anyway, I will be teaching you the traditional approach as well. I will be teaching you both, but for classroom discussion purpose, I prefer to go with modern rules of accounting because of its application oriented. Why all those things? The application part can be built really well under the modern rules of accounting. So I prefer to go with modern rules of accounting, but anyway, I'll teach you both the approaches. Whichever is convenient to you, you can follow those approach. Either way, the final answer will remain the same. Now, having said this, what is this modern rules of accounting of journal entries? Here, what we do now, first, what we do is we have 2 broad categories called trading P&L and balance sheet. Uh, this trading and P&L, what will happen now? Generally, the recurring type of transactions will get captured in trading and P&L item. In trading and P&L head, all the recurring transactions will get captured under trading and P&L. Just for example purpose, let's say you are running some business. Maybe you can think from my perspective as well. Think from my perspective. My name is Shivram. I am having this academy called as SJK classes. Now tell me, just think from my perspective. From my perspective, for my business, what could be the recurring transaction that will happen in my business? The one thing is, for my faculties, I have to pay them salary. I have to pay rent for my academy. The place where I conduct my classes, for that place, I have to pay a rent. Then I have to pay the electricity bill, water bill will be there, maintenance cost will be there, and so on. So all these kind of recurring transactions will be captured under trading and P&L part of the financial statement. Now I'll give you a pro forma trading and P&L account. This is how the trading and P&L account will look like. In trading and P&L account, as I told you, accounts in modern rules of accounting, we have four nature of classification: expenses, income, asset, liability. These four heads gets captured under these two broad categories. In trading P&L, I have expenses side and income side. So these expenses and income which we spoke of just now will get captured under trading and P&L, and this asset and liability will get captured under balance sheet. Now I'll just show you a pro forma statement of trading P&L. So in trading P&L, look at the expenditure part. Now what we discussed, the recurring transactions will get captured under trading and P&L, right? So in the expenses side, I'll just name a few ledgers now, few accounts now. Purchases. What do we mean by purchases? Purchases nothing but refers to the raw material which we purchase. Since it's a recurring transaction, I'll be keeping on purchasing the raw material again and again for my business. So purchases is a recurring transaction. It comes under the expenditure side. Then once raw material is there, why do I purchase the raw material? To manufacture the goods, right? So with just raw material, I can't make the manufacturing of goods. Raw material, besides raw material, what I need the manpower, labors. For labors, what I have to do? I have to pay them wages. So that's the second part. So purchase is nothing but purchasing of raw material, a recurring transaction. Hence it comes under the trading P&L part of the expenditure side, because for a firm this is going to be an expenditure. I have to spend on my raw material. Similarly, I have to pay for my labors, wages. Again, wages being an expenditure, it's a recurring transaction. Again, it comes under the trading P&L part of the financial statements under the expenditure side. So you have raw material, you have labor. Is it sufficient for making the production? Of course, answer is no, because besides raw material and labor, what else we need? We might need the power bill, electricity. So the electricity cost, what you incur in our factory, is going to be captured under the head called as power and fuel. Then there's something called as carriage inward. What is this carriage inward? Carriage is nothing but transportation cost. For bringing the raw material from supplier's place to our place, I have to incur transportation cost, right? Which is called as carriage inward. So all these things are what? All are recurring transaction. I have to keep on purchasing raw material. I have to keep on paying salaries to my laborers. I have to keep on paying the power bill. I have to incur the transportation cost. So all these are money spent for production. So these things are getting captured on the under the expenditure side of the trading P&L. Now let's look at some examples under income part. One thing is sales. What is a sales? Sales is nothing but the revenue what you make by selling goods or services. So that is again a recurring transaction for the business. It's an income for the business. So it's getting captured under the income side. Closing stock, I will take it a bit later, not now. Look at few more examples. Interest received. Suppose I have put some fixed deposit in my bank. For that fixed deposit, I might receive some interest. This interest is an income for the business. Then again, it's a recurring transaction. As long as you have the fixed deposit, you'll keep on getting the interest, which should be either monthly or bi-monthly or quarterly or half-yearly or yearly, whatever will be the tenure. But this income will keep on, I'll be getting on this income again and again as long as I have my fixed deposit. So it's a recurring transaction. It is coming under income side of the financials. Commission received. What is this commission received? Suppose I'm acting as an agent for a third party. I am selling the goods on their behalf. So for the sales I have made, I will receive commission from the third party. Again, as I sell more and more goods, I'll get more and more income. So it's again a recurring transaction. Commission received is an income for me. Suppose if I pay commission to someone, I have appointed a sales agent for the sales they make on my behalf. I have to pay them commission. If that is the case, in that case, the commission will be classified as an expenditure. Look at the expenditure side. We have commission here. So commission could be either under the expenditure or an income. Depending on the nature of the transaction, we have to classify it. Similarly, interest. Interest received is an income. Interest paid will be an expenditure. What is interest paid? I have taken loan from a bank. As long as the loan is outstanding, I have to keep on paying the interest rate. So interest is going to be an expenditure for the business. So the same item can be classified under expenditure as well as under the income side. You have to just think logically and make the classification properly. Now let's move on. Let's look at some transactions. So as of now, the summary is in trading P&L. Generally, the recurring transactions will get captured under trading and P&L account. That is the expenditure side and the income side. I'll just stress this one. I would have made this point here. The important word to be noted here is generally, because there are few exceptions here. Sometimes once in a while transactions will also get captured in trading and P&L. Those things will come a bit later, not now, but majority of the transactions in trading P&L will be of recurring nature. Now let's speak of the balance sheet part. Balance sheet is nothing but it will capture the future oriented concepts. For example, in balance sheet you have what? The assets and liabilities. So balance sheet is further classified into asset, liability. What is an asset? Asset is nothing but which gives us some future benefit. For example, let's say I have purchased a land. What is the benefit of holding this land? Futurely, I can sell this land and make some money out of it. Or I can construct a building on that land. Or I can give that land as a rent to someone else. So, this land or machinery also, furniture, building, all these things are assets to the entity. These are going to give you some benefits to you. And what is a liability? These are nothing but obligation to pay. The future obligation to pay will be called as a liability. Just for example purpose, I'll show you the pro forma balance sheet as well. In balance sheet, let's speak of the asset side. So look here, in asset side, the first item is what? Tangible assets or fixed assets, which is like land and building. So land and buildings asset for the entity. PPE. What is PPE? Nothing but plant, property, equipment. To put it simple words, these are nothing but machineries. So machinery is an asset for the business. Furniture, it's an asset for the business. You have made some investment, asset for the business. Few more. Let's speak of cash. The cash balance, whatever is there in the entity, the company, is again an asset for the business. Cash in, this is cash in hand. So the physical cash is called as cash in hand. And what is cash at bank? It is nothing but the bank balance of the firm. Let's say I have a bank account in HDFC Bank. In HDFC Bank, I have a balance of 2 lakhs, which is called as cash in bank. Using this 2 lakhs, I can purchase whatever I want. I can purchase some asset, I can purchase some raw materials, I can pay salary to my staff, etc. So it's going to be of some usefulness to me. So these are the items under the asset part of the financials. Now, we'll look at the modern rules of accounting. In modern rules, how the journal entries will be passed. That's what we're going to look upon right now. So expenses has a debit balance and income has a credit balance. Now what is this debit and credit? I'll come back to it shortly. Right now, what you have to remember is expenses will have a debit balance and income has a credit balance. Now what is this debit, credit and all? It's something like this. In English, we call this as A, this as B, this as C. We haven't questioned why it is called as A, this is called as B, or this is called as C and all. We have just accepted it. So based on these fundamentals or basics, we have built the English subject. Similarly, accounts being also a language, we should have some basics based on which we can build the subject. So across the world, when everyone preparing the accounts, they treat the expenses to have a debit balance. Similarly, we should also treat expenses to have a debit balance, and for income we'll have a credit balance, asset will have a debit balance, liability has a credit balance. So these are the basics with which we build the subject. We can't question why expense is having a debit and why expense doesn't have a credit balance and all. So now let's look into how this debit and credit will work in accountancy. So this is used for passing journal entries. Now how does debit and credit works? Let's see right now. Let's take the first transaction. Generally when we start a business, the very first event will be infusion of money into the business by the proprietor. So the transaction is started business with cash. Now what is we're trying to convey here? We have started a business, and in this business the proprietor has infused money into this business. How much money has infused here? 8 lakhs. Now what is the accounts involved here? So once you read a transaction, you have to take out the keywords from the transaction. Now the keywords are started business. Who will start a business? Proprietor. In accounts, proprietor's account in business is called as capital. I repeat, once you come across a transaction, the first step is to pick out the keywords from the transaction. We will call this as ledgers. That's a jargon we use here. Right now, I'll just go with simple English. Take out the keywords from the transaction. Now, what is the summary here? A proprietor has started a business with cash. Because started business can be done only by the proprietors. So, started business means I have to bring in the proprietor's name. In accounts, proprietor's account will be called as capital. So in this transaction, what are the accounts involved? One account is capital account. After seeing which word we have brought in capital, started business. And what is the other account involved here? It is cash account. So the two accounts involved here are cash and capital. So cash account is involved here, capital account is involved here. Once we have picked out the keywords from the transaction, the next step is classification. What is classification? We have to classify the accounts into expenses, income, assets, or liabilities. As I told you, in modern rules of accounting, we have only four basic heads: expense, income, asset, liability. Under these four heads only, these accounts will get classified. Now, cash. What is the nature of this account? Cash will be an asset to the business. Why? Because if you have some cash, it is going to be of some future benefit to you. It is going to give you some future benefit, hence cash will be an asset. I'll just show you the pro forma as well. In balance sheet, on the asset side, if you see the asset side here, you will have cash in hand. So cash in hand is an asset for the business. Simple logic. Using this cash, you will be able to purchase whatever you want in future. So cash is an asset for the business, and asset by default has got what balance? Debit balance. And what is the other account involved here? Capital. This is going to be an important point. See, capital, what is the nature? Now here comes one important topic. There's something called as accounting principles, which we'll touch upon shortly. Accounting principles are nothing but some fundamentals, some rules given to us based on which we should build the subject. Now, capital, we have one principle called as business entity concept. Now, what this rule says now, it's like this. Now, I'll give you a scenario. Take myself. My name is Shivaram, and I'm having a business called as SJK classes. Now, a question is whether this business and myself, we both are same or we both are different. That question will arise. Now, as per this rule, this accounting principle, what it says is the proprietor is different, the business is different. So, what the business entity concept says now, the proprietors are different and the business are different. We have to always prepare the accounts from business perspective only. So, in that case, now what happens from this SJK classes business point of view, since myself, Shivaram, and this businesses are different, from business perspective, what the business has done today, it has taken money from me. SJ classes has taken money from the proprietor. Now, as a proprietor, I am not doing charity here. Whatever money I have given to the business, at some point of time, I will take it back. Generally, which point of time? When the business gets wound up, the business has to pay me back whatever money I have invested in the firm. So the business has to repay it back, right? Hence, capital should be what? It's a liability. I'll just show you the pro forma statement as well. In balance sheet, on the liability side, we have something called capital account. Capital comes under liability. Why? Because capital, what is capital? The money invested by the proprietor in the business. Since proprietor and the business are different, from business perspective, business has to repay it back in future. Future obligation to pay is there. Hence, capital will be a liability for the business. And the liability has got what balance? Credit balance. So capital is a liability and liability has a credit balance. Now what is the accounting entry we have to pass here? Entry is going to be cash. Now what happens? As per modern rules of accounting, cash being an asset, now the cash is increasing or decreasing. You have to think only from business perspective. From business perspective, the cash is increasing today. Hence we are debiting cash account. How to put a debit? Near the margin, you have to write that ledger name, account name, which is cash here, and followed by you have to put something called DR. A suffix will be given called as DR. So for debit, what we do is put the relevant account name followed by DR should be written. There is no logic and all behind this. This is just a format. Similarly, capital, which is a liability. Now, from business perspective alone, you have to think here. Capital being a liability, liability is increasing or decreasing. Firm has borrowed money from the proprietor. Firm has to repay it back. So, liability has increased today. So, what we should do? Capital being a liability. When liability increases, I have to give a credit. So, what I will do here? Capital will be credited. How to write credit? Leave some space from the margin, leave some space, put a prefix TO followed by relevant account name. So this DR, this prefix to, all these things are just to denote the nature of the account. So okay, cash has been debited, capital has been credited. So just for communication purpose, we have this structure. There is no concept behind DR and TO and all. So cash, if something is going to be debited now, we have to write closer to the margin followed by a letter called as DR. And for credit, we will leave some space in the front. We will put a prefix called a TO followed by ledger name. That's it. So amount is 8 lakhs, 8 lakhs. Now this is the transaction. Now let's move to the next one. Why the proprietor would have infused money into the business? Using this money, what the firm will do? They would have purchased some raw materials or some assets for the business purpose. Now that's what we are going to do right now. The second transaction is going to be purchase of machinery, rupees 60,000. So the second transaction is we have purchased a machinery for 60,000 rupees. Now what are the accounts involved here? Visualize this transaction. You are going to a shop, you are purchasing a machinery. Now what is the accounts involved here? Machine account is involved. Automatica, the next account should be what? I can't purchase machine free of cost. I have to pay money for it, right? So second account is going to be cash account. So the accounts are machine account, cash account. Now here what will happen? Machinery. So there are two accounts involved here. One is machinery, the other one is cash. Now what you should do? You have to go for classification. What is the nature of machine account? Machine will be an expenditure, income, asset, liability. How should you think for this? First, go from the macro view. You have two places called trading P&L, balance sheet. What is trading P&L? The recurring transactions will be captured in trading P&L. And what is balance sheet? The future oriented concepts will be captured in balance sheet. Now, think logically. Machinery will be coming under trading P&L, balance sheet. Is it a recurring transaction or a one-time event? Machine and all, I won't be purchasing frequently. Once in a while only, we will purchase a machinery. Hence, machinery is going to be a rare transaction. So it has to be in balance sheet only. I hope now you should be able to do the filtering out. Now, since it's going to be in balance sheet, is it going to be an asset or a liability? Obviously, from a machinery, you derive some future benefits. Hence, machine has to be a asset for the business. So, machinery is an asset for the business. Now, asset is, next thing is what? Asset by default has got what balance? Debit balance. So, I have this debit balance. And what is the other account involved here? Cash. Same logic. Cash is an asset for a business. Just now we saw this. Cash is an asset for the business. Asset has a debit balance. These are the default balances. You have to remember that. Now apply the modern rules of accounting and find out which account has to be debited and which account has to be credited. Now the machinery account should be debited or credited on machine. How to think about this? Is a machine balance is increasing in the business or decreasing in the business. So machine balances from business perspective. What you should do? Think from business perspective. Business is purchasing the machinery. That means machinery is going up for the business. The machine value is increasing in the business. So what you should do? Machinery, which is an asset, asset is increasing now. I have to give a debit. That's a modern rules. Asset increases now. I have to give a debit, and if asset decreases, I have to give a credit. And so machine has to be debited here. And what about cash? From business perspective only you have to think again. From business perspective, cash is increasing or decreasing. We are paying out cash to purchase the machinery. Hence, cash is decreasing here. So what you have to do? Cash has to be credited. Now, how to write this? Machine account should be near the margin, followed by DR. Cash is credited, right? So leave some space in the front, put a prefix TO, followed by ledger name called as cash. So entry is going to be machinery to cash 60,000, 60,000. That's it. Now, next transaction. After purchasing the machinery, why I purchase the machinery? Because I need to do some production activity. Now, what I will do? I am going to purchase the raw materials now. That's the third transaction. So, third transaction is purchased goods for cash rupees 25,000. Now, what are the accounts involved here? Look at this transaction. Visualize this. Always, when you are studying the accountancy, you must visualize the transaction. Purchased goods now. Okay, I'm purchasing some raw material free of cost. No. What I have done? By paying cash. So by paying cash, I am purchasing the raw material. So what are the accounts involved here? Purchased goods means I have to use a ledger called purchases. I repeat, when you see the word purchased goods, I have to bring in a ledger called purchase account. And what is the other account involved here? How have you done this purchase? Through cash. So the other account involved here is cash account. So the accounts involved are purchase account, second account is cash account. Purchase, what is the nature? Again, let's go back to the basics. Flow chart. First, macro view, we have two broad heads, trading P&L and balance sheet. Is purchasing of raw material a recurring transaction or one-time activity? Raw material will be purchased frequently. So obviously, purchases has to be in trading P&L. Then, is it going to be an expense or income? When you're purchasing something, obviously it has to be an expense. You haven't sold it. Only when it's sold off, you make some revenue out of it. So at the time of purchase, it is going to be an expenditure. That's what we have done here. So purchases nature is going to be an expenditure. I'll show you the pro forma statement as well. The trading and P&L part. The trading P&L part. Look at here. The first part is here. You have purchases. I just want to clarify one point here. There are two sections here. One is trading, the other one is P&L. What is this trading? What is this P&L? Why do we differentiate these two? All those things we'll see a bit later, not now. Just remember that in trading P&L we have two sections. One section is trading, the other section is P&L. Right now, just remember this alone. Why we are going for all this classification and all, we'll see it a bit later. So the first part, we'll have a total in between. The items above this total, this section will be called as trading, and the items below the total account, this section will be called as P&L. So all these classification differences we'll see upon later. Now purchases is coming in which place? It is coming in the first part. So purchases is going to be a trading account item. That's what I've done here. Purchases trading expenditure. And what is cash? Already we have seen two transactions. Cash is an asset for the business. So asset will have what balance? Debit balance. That's a default balance. So purchases, which is an expense, expenditure, default balance is debit, asset also the default balance is debit. So the accounts involved here are purchases and cash, and purchase is an expenditure item, cash is an asset item, asset has a debit balance, expenditure also has a debit balance. Now you have to apply the modern rules of accounting. When you purchase something or when you incur some expenditure, what happens when you keep on purchasing the goods? What happens? The expenditure shoots up. If you buy more and more raw material, the expenditure also goes up, right? So when expenditure increases, what you have to do? You have to give a debit. That's what we're doing here. So when expenditure goes up, I have to give a debit. And what about cash? Cash is an asset for the business. Now, what happens here is the cash is increasing in the business or decreasing in the business. We are paying money to procure the raw material. That means, from business perspective, the cash is going down. So, cash being an asset, if asset increases, you have to give a debit. So, if asset decreases, what I have to do? I have to give a credit. So, entry is going to be purchase account debit to cash account. Amount is 25,000, 25,000. I hope it should be clear. Shall we move on? Next transaction. Okay, now you have purchased the raw material. If raw material is purchased, will you get the output? No. I need what? Manpower as well. So after purchasing the raw material, I need manpower for converting the raw material into finished goods. So next item is going to be paid wages. I think you are able to visualize the flow of accounts here. Just put yourself as a proprietor and think what you will do. When you start a business, the first thing is we will infuse capital. Then we'll purchase some assets. Why do we purchase the assets? Because I have to go for production. For production, I need some raw material. So that's the next event for us. If by procuring raw material, will we get the output? Of course, no. So we need some manpower. That's the next transaction. So all these are some practical aspects only. If you start thinking each transactions, just some basic accounting logic, you'll be able to find the answers for these items. Now the next transaction is what? Paid wages. What is this? We are paying wages to our employees, factory workers. Now what are the accounts involved here? One account is I'm paying wages, right? So one account should be obviously wages account will be involved. And what is the other account? Cash account, because after seeing which word we are bringing in cash, paid. After seeing the word paid, I am bringing in cash account. So the two accounts involved here are wages account, cash account. Wages, what is the nature of the wages? Same logic. Wages, first there are two broad areas in accounts: trading P&L, balance sheet. So wages is a recurring transaction, a one-time activity. It's a recurring transaction. I have to keep on paying wages month after month or day by day or weekly once, depending upon the agreement with the employees. We have to pay the wages. So wages is a recurring transaction. So what happens? Wages will come under trading P&L. So the next step is what? In trading P&L, we have two classification: expenses and income. Is it an expenditure or is it an income? Wages, obviously we are paying the money. That means it has to be an expenditure. And is it a trading or P&L item? It will come in the first part. It's a trading item. Maybe just for clarity purpose, I'll give you a small hint here as to what is this trading and what is this P&L. The way you have to think is all the production oriented cost will be captured in trading, and non-production cost will come into P&L. A firm incurs three types of expenditure: manufacturing, administration, selling and distribution. Manufacturing cost is something which the firm incurs during production process. For example, the purchase cost. What is purchase cost? The cost incurred for procuring the raw material. I am purchasing the raw material. That's what has been captured through purchases. What is wages? Wage cost is nothing but the cost which we incur for converting the raw material to finished products. I will be hiring some laborers who will work for me for converting this raw material into finished goods. For them, I have to pay them wage cost. Then, with material and labor, will I be able to complete the production? Answer is no. I have been incurring the power cost inside the factory. That power cost has been captured as power and fuel. Then, what is this carriage inward? It's nothing but the cost incurred for transporting the raw materials from supplier's place to our place, which is called as carriage inward. So, the debit side of trading account, and what is trading? The items above this total is called as trading account. The trading account debit side represents the input into the factory. So, these are the expenditure which we incur for production purpose, or in short, we call this as manufacturing cost. Why do we incur all these costs? With this manufacturing cost, what I do, I complete the finished goods. That goods will be either, what we will do, we'll either sell it off or it will remain as closing stock. So in short, debit side of this trading account will capture the manufacturing cost, the cost incurred inside the factory for production purpose. In short, we call it as input into the factory. So the debit side will show you the input into the factory, and the credit side will show us the output from the factory. So the output, whatever we get, it will be either sold off or it will remain as closing stock. That's the logic behind trading account. And what is this P&L all about? P&L will capture the administration as well as selling and distribution cost. So if you look at the expenditure side of P&L, it has what is the example for administrative cost? The cost, the salary which we pay for administrative staff like accountants, HR people, etc. For these people, we have to pay them salary. That salary will be captured in P&L. In salary, we have in P&L we have salary. The salary which we pay to factory workers is called as wages. So wages is different, salary is different. Even though both are for employees, wages is meant for factory workers. Salary is meant for administrative people like accountants, HR people, etc. And what is this selling and distribution cost? The classic case for selling cost is advertisement. Advertisement is a selling expenditure. You look at the P&L, we'll have this advertisement cost. Advertisement, yeah, it's here. Then another case could be distribution. The best example is carriage outward. What is this carriage outward? The cost we incur for selling the goods from our place to customer's place. For distributing the products, for the distribution, we'll incur some cost, right, which is called as carriage outward. It's also called as cartage. Both are synonyms. You can use whichever terms as we like. So carriage or cartage is a thing, but the transportation cost incurred for selling the goods from our place to customer's place. So the broadly, a firm will incur manufacturing, administration, selling, and distribution. The manufacturing cost will be in trading account. I'll come to the back to this opening stock bit later, and the administrative and selling and distribution cost will be booked in P&L. Now let's come back here. The topic which we are covering is paid wages. So paid wages means what is happening here? Wages is a recurring transaction. Wages is a recurring transaction. I have to pay wages continuously to my workers. So it is a part of, it's an expenditure for the firm, and wages is a trading item. It's a manufacturing cost, right? So it's a trading item. So wages will be booked in trading account. Expense as a debit balance, and cash, which is an asset, has a debit balance. So as per modern rules of accounting, what we have to do? Assets, if it increases, I have to give a debit. If asset decreases, I have to give a credit. Now, when I pay wages, cash is increasing or decreasing. From firm's perspective, we have to see firm is paying the wages. Now, the cash balance goes down in the firm. So, since cash reduces, I have to give a credit. So, cash will be given a credit. And what about wages? It's an expenditure. Expenditure goes up. When I pay more and more wages to the employees, when I hire more workers, I have to pay more wages. So, wages is going to be an expenditure. So what happens? Expenditure shoots up. Entry is wages account debit to cash account. Now let's look at the next transaction, which is wages payable. What is the difference between the fourth and the fifth transaction? In fourth transaction, we have paid the wages. In fifth transaction, we are yet to pay the wages. That's a difference. But there is one similarity in these two. The similarity is in fourth transaction, I have availed the services and I have paid the amount as well. Whereas in fifth transaction, I have availed the services, but I am yet to pay the amount. That's the difference. So what happens is wages payable means I have availed the services, I am yet to pay. Wages paid means I have availed the services and I have paid as well. Now a question will arise, since we have not made any payment, should I book this transaction immediately? The answer is still yes. Now we are going to see the second accounting principle. Already I have seen the first one, which is the business entity concept. What it says that the company is different, promoter is different. We have to view the transaction from business perspective only. That's the first accounting principle which we had. Now we are going to look at the second accounting principle, which is called as accrual concept. What is accrual concept? It says that transactions are recorded in books of accounts whether or not money has been paid or received. What is the meaning? It means that whether you receive the amount or pay the amount is going to be irrelevant for accounting purpose. If a transaction has occurred, in this case, what is the transaction? I have availed the services from laborers. That's a transaction. Since I have availed the services, I have to pay the amount, right? So wages has to be captured now itself. I can't postpone the recognition of expenditure or income just because I haven't paid or received the amount. So receipt and payment is going to be irrelevant for accounting perspective. So coming back here, the accounts involved are wages account will be involved here, and the other account is wages payable. I have an obligation to pay. So wages payable is a liability. Wages, just now we saw, it's a trading expenditure item. Liability has credit balance, expenditure has debit balance. Now what is accounting entry? Wages payable, a liability for the business. It is increasing or decreasing. Since I have an obligation to pay, I have availed the services, I have an obligation to pay. The liability goes up for the entity. So what happens when liability increases? When liability increases, I have to give a credit. That's what we'll do now. Wages payable will be given a credit. So it's going to be two wages payable. And what about wages? Since I have availed the services, expenditure shoots up for the entity. So I have to debit the expenditure account. So wages account debit to wages payable. That's accounting entry over. Now let's look at the flow of events. First, what we did, the promoter infused capital into the business. That's the first transaction we had. Why he infused the capital? He infused capital to procure, to purchase some assets and for purchasing some raw materials. That's what we have done. We have purchased some machinery, then we have purchased the raw materials as well. With raw materials, we'll be able to complete the production? No. I need manpower. That's the next transaction we had, paid wages. With laborers, can I complete the production? Of course not. What could be the next transaction? The power cost incurred inside the factory. So that's our next transaction. Transaction number 6. What is the entry for? Paid for power and fuel. So paid for power and fuel rupees 2500. Now what is the summary here? We have paid. After seeing the word paid, what I should do? I should bring in cash account. And for what I have paid? The power and fuel. So what is power and fuel? Simply the power cost incurred inside the factory. That's it. So power and fuel is what type of an item? It's a expenditure. It's a recurring transaction. Month on month, I'll be getting the power cost. I'll get the EB bill. I have to pay for it. So power and fuel is something but the EB bill incurred inside the factory. So it's a manufacturing cost. It is part of trading account. I'll show you the pro forma statement. In trading account, the power cost is accounted here. Power and fuel. So power cost is an expenditure, cash is an asset. Expenditure has got what balance? Debit balance. Asset, debit balance. Now applying the modern rules of accounting, what I have to do? Power cost, which is an expense, is it increasing or decreasing? It is increasing. I am consuming the power, right? So the expenses shoots up. I have to give a debit. And what about cash? I am paying the money. So cash decreases for the firm. Cash goes down. So we are going to give credit to cash. It could be either to bank or it could be to cash as well. Let's go for the next transaction. The transaction is sold goods to B for cash rupees 40,000. Now in this transaction, what is involved? We are selling the goods to B. So after seeing the word sold goods, I have to bring in which account? Sales account. So the accounts involved are, one is sales account, the other one is cash account. So cash account and sales account are involved here. Cash, what is the nature? Cash is an asset for a business. Asset has debit balance. And what about sales? Sales is an income. When I sell the goods, I make revenue out of it. So sales is an income for the business. Income has a credit balance. Now, what is the accounting entry? From business perspective, if you look at what happens now, the cash balance increases. So when cash being an asset, when asset goes up, I have to give a debit. So what we will do while passing the entry is going to be cash account debit. And what about sales account? Sales, which is an income. When I sell the goods, I make revenue, right? So when I sell more and more goods, what happens? The revenue also goes up. So if I sell more, I make more revenue. So when we're selling the goods, the revenue goes up. What I have to do? When income increases, as per modern rules of accounting, when income increases, I have to give a credit. That's what we will do now. So it is going to be cash account debit to sales account. So entry is cash account debit to sales account. Amount is 40,000, 40,000. Then next transaction, paid salary rupees 68,000. What is the summary here? We are paying the salary to the staff. Just for clarity purpose, there is a difference between wages and salary, because in the previous transaction we have seen about wages. So wages is different, salary is different. The difference is wages is paid to manufacturing workers or the factory workers. Whatever we pay, we call it as wages, and whatever amount we pay to administrative staff will be called as salary. So the difference is, just look at this structure of trading and P&L. Wages will go into trading account because it's a manufacturing cost. Salary is paid to admin people. They are nowhere related to production part. So salary will be captured in P&L. Just for this differentiation purpose, we have two heads called wages and salary. So wages is paid to manufacturing workers. Salary is paid to administrative staff. So salary will be captured in P&L. I'll just show the salary here. Where is salary? Yeah, salary is here. Salary is paid to admin staff like accountants, HR people, so on. So next one. So come back here. Paid salary. So salary, paid salary. The accounts involved are salary account is involved, and what is the other account? We are paying the salary. That means after seeing the word paid, I have to bring in cash account. So accounts involved are salary account, cash account. Salary is a P&L expenditure. It's a non-manufacturing cost. It will come into P&L. It's admin cost. It's a part of P&L item, and cash is an asset item. Expense has debit balance, asset has debit balance. Now, what is accounting entry? When we pay salary, what happens? As I pay more and more salary, the expenditure for the company goes up, right? So when expenditure shoots up, what I have to do? I have to give a debit. So salary will be given a debit. And what about cash? When I pay cash, from business perspective, the cash balance reduces. So I have to give a credit to cash account. So entry is salary account debit to cash, amount is 6,800, 6,800. Let's move to the next one. Paid for advertisement. What is the accounts involved here? After seeing the word paid, I have to bring in which account? Cash account. And what is the other account involved? Advertisement. So the two accounts involved are advertisement as well as cash. So advertisement, what is the nature? Advertisement is a kind of recurring transaction. Year after year, I'll be going for advertisement. I have to push my sales. So advertisement is a recurring cost. It's a P&L expenditure item, and cash is a balance sheet asset. Expense has debit balance, asset has debit balance. So what is accounting entry? When I pay for advertisement, what happens? The expenditure shoots up, so I have to give a debit for advertisement account. Advertisement, which is an expenditure, it increases as you push more and more advertisement. The expenditure goes up for the company. So entry will be advertisement account debit. And what about cash? Cash decreases for the firm, asset reduces, so give a credit. Entry is advertisement to cash. You can make it as to cash or bank, both are same. There is nothing difference between cash and bank. Cash is nothing but the physical cash. Bank is nothing but the amount I'm going to pay from my bank account. So bank and cash can be used interchangeably. Whenever you see the word paid, you can use cash or bank. So I'll just rephrase this one as bank account. So accounts involved are advertisement and bank, or advertisement and cash. So both are completely fine. Next one. Let's go for the next transaction. The transaction is withdrew cash for personal use. This is a very, very important transaction. Now in this transaction, what happens is withdrew cash. for personal use. Now, accounts involved here are cash account. Cash has been withdrawn, so cash is involved, and the other account which is involved is personal use. After seeing the word personal use, what I have to do is we have to bring in a ledger called drawings. So, what is the scenario here? The proprietor has withdrawn cash from the business for his personal purpose. From the business, only the proprietor can withdraw. Others can't withdraw. If others withdraw, it's called as theft. So only the proprietor has got the right to withdraw the money from the business. Now, so the accounts involved here are cash account and he has withdrawn for personal use, right? So whenever we see this word withdraw for personal use, we bring in an account called as drawings. So the accounts involved here are drawings account and cash account. So what is the accounting entry? The accounting entry is from business perspective, what is the nature of drawings? Because cash, everybody knows, cash is an asset for a business. Now, what happens from business perspective? The cash goes down because from business, cash is moving out, right? So, cash reduces. I have to give a credit. So, cash will be given a credit. That's fine. But what is the nature of drawings? This is an important topic. Drawings, the nature is an asset for a business. The logic is simple. Let's say I'm withdrawing some 5,000 rupees from you. What is the next question you'll ask me? You'll ask me about the repayment part, right? From your perspective, you have to get back the money from me. So, future la, you have to get the money from me. Hence, from your perspective, drawings will be an asset. Similarly, what is the scenario here? Proprietor is different, business is different. Proprietor has taken money from the business. So, from business perspective, the company has to get the money from the proprietor. So from business perspective, drawings is a future receivable, hence drawings is an asset for a business. Most of them are making a mistake here. They are saying drawings is an expenditure. Drawings is never an expenditure. Drawings is something receivable from the company in future. So drawings will be an asset for the business. So accounts involved are drawings account, which is an asset because there's a receivable from the proprietor in future. Other account is cash. Asset has debit balance. Now what happens? Drawings, which is an asset, increases. So when asset increases, you have to give a debit, and when cash asset decreases, you have to give a credit. So entry is drawings account debit to cash account. So let's put an end to this basics of journal entries. As we move into subsequent chapters, we'll see how we are going to prepare the journal entries for some complex transactions. So let's meet in subsequent chapters. Thank you.